It's Monday, November 13th. We're getting ready for the week. We've had quite the rally the last couple weeks. And I'll put a word of caution out there for you. It is ChopX week, and I'm hoping that we get a little chop so that we can set up some good TTM, TPS plays. My overall thesis is we're going to go higher into the end of the year. There is danger of, things like the credit rating got downgraded, right, from stable to negative by Moody's over the weekend. You've got war, pestilence, famine. You got all the stuff you read about in the book of Revelations, right? Which, when it comes around, people freak out. But I always bet on the USA. And that's what I'm doing here. That's what I've been doing all year. And I'll continue to do that. But as I read this and as I show you my bullishness, what I want you to understand is I was bullish thinking we were going to go into the end of the year being strong through August, September, and October, and we were going down, right? So it doesn't mean we can't have pullbacks. I don't think we're going to have a pullback like we did in those 3 months, but it doesn't mean we're not going to pull back. In fact, I would love a pullback. Okay, so let me see if I can maximize this a little bit. Is this document readable? Can you guys read this? Do I need to make the words bigger? Okay, it is. All right, so I just to let you know, I've cashed out of a lot of positions. I mean, a lot. I was about 90% net long. And I've cashed out a ton. And I haven't cashed out a ton because I think we're going to go back down and we're going to look out below or anything like that. But I did it because they reached my targets. I was thinking it would take most of November, but my targets were reached in the first 2 weeks, some of them the first week. And so a lot of the bullish action I was expecting throughout November, it's already happened. And it doesn't mean it can't go higher, but those were my targets. That's my plan. I'm sticking with my plan. Okay. So if we do not get a pullback, which a lot of people are screaming for, doesn't mean I can't play it. And let me explain to you why. If you continually wait for the perfect setup or something that makes you feel comfortable, then a lot of times the market will not let you in. You miss your opportunity, right? You miss the dip. You miss whatever you would have felt made you feel more comfortable. And what this means is I must do shorter time frame trades that can lead into larger time frame trades. I'm going to give you some examples of that later on in the document. If the shorter time frame trades break down, then that's when the longer time frame trades will allow themselves to be gotten. Does that make sense? Okay. Now, before we get going, let me explain to you how a rally like this happens. And everything that I'm putting in here, guys, was in all of the other documents that I was sharing with you guys on Monday. And these are things that you have to pay attention to and watch so that you can decide if you want to be on the side of the majority or the minority, right? So another example is right now, financial stocks are the most shorted that they've been in a long time. And so you have to decide, do I want to be on that side, right, where everybody is on the short side, or do I want to flip and be on the long side, right? And so for me, I was on the long side of this strictly because I thought earnings were going to be really good. Okay. So the positioning was very lopsided, too much overweight cash, and the lowest risk on since the pandemic lows, right? 10-year Treasury was the most shorted since 2018, which is a bet that interest rates are going to go higher. You can see here, right? So everybody's betting interest rates higher. There was record puts. Inflation was trending in the correct direction, as well as the hourly wages trending down. We were having high GDP, recession. What recession, right? Well, if you're having high GDP, well, what does that mean? Well, we're putting out positive instead of negative, right? Percentages. Now, the argument that I made against this was, well, how much of this is government spending, right? And here's the kicker. Everyone was shorting in the hole. Do you guys know what shorting in the hole means? So shorting in the hole would be like if you were to look at the SPY. As we broke down here, the technical is telling you to short. The technical is saying short, 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 right? And you're literally shorting in the hole that you've broken down, and you're shorting as it's going down. And so what happens a lot of times is once you short in the hole and you rally, they'll start adding to their position. They won't believe the rally, right? So this is how you get these double gap ups. And so it's like short, oh, let me short again here as we're coming back, because technically all we're doing is retesting this breakdown, right? And this is how you start getting double gaps. I know this because I've been stuck on that side many a times as a short seller, and it's not fun. Okay, and so this compounds the rally and can lead to double gaps. The match that lit the powder keg, in my opinion, was earnings. Right? I've been telling you that earnings were going to come in much better than what people expected. This was everything that my thesis was based on. Negative consensus on earnings and all this other data, right? Well, we had first positive earnings growth since Q3 2022. And then the cash on the sideline was chase the rally or they're going to miss it entirely. Okay? So I'll give you an example of this. Right? So this is, if you guys don't know what this is, NAIM, it's just funds, right? Hedge funds, managers of funds. You can see that at the beginning of November, you see that they were right below 30. You see how they were right below 30 right here? That means they only had 30% of their portfolio going, right? Now look at it. From 30 to 60, they've doubled up 100% in 2 weeks, right? Now, we can get up here into the 100 range, and I expect us to get up here in the 100 range by the end of the year. I think we'll have some 100 prints, but this is what I'm talking about. This is the chase. You see how that works? Like, they doubled up their positions. Okay, so now let's look at earnings so far this quarter versus what was expected. The picture below is from my October 16th through the 20th document. Right, I sent you guys this out, and I said, hey, happy OPEX week. And I said, I think they're going to report year-over-year earnings growth. If they do, it'll be the first time since Q3 2022. So the expectations here, you can see, were -3, right? That's right there. Okay. Well, you can see what's happened. This is reality. So -0.3 versus 4.1. It's a big difference. The thing that kind of sticks out to me here, though, is check out this Q4. Look how much they dropped it. So next quarter, they were expecting 8, and now they're expecting 3.2. So, well, what does that mean? Well, it just means that in my opinion, that a lot of people are lowering their guidance to play it safe. And that's kind of the same playbook that they did during COVID. Anytime you have a reason to lower guidance and to play cautious, a lot of execs like that so that you don't disappoint if something bad happens, because you never know. Now, I also expect this rally to continue into the end of the year. This indicator that I showed you guys, the breadth thrust indicator, right? I went over that with you guys. When it triggers, these are the historical returns. 1 month, 3 months, 6 months, and 12 months, right? And it actually triggered twice for this 11/3/2023 within the past 18 months. And the averages are even better. So, 27% gain, I'll take it if that comes to fruition. I'd love it. Now, the other thing is if you like Almanac Trader, he gave us a great article you should read. This is it. This is the link to it right here. In the article, he talks about how we remain bullish for the next 60 days, and he gives us this great chart. And what this chart is showing you is after we've had continual push days, so how many days in a row did we have positive? We had 1, 2, 3, 4, 5, 6, 7. We had 8 days positive of running up, right? And so what he did is he went back and he looked and he said, in that article you can see how many times this has happened. But it shows the blue line is at 7 days, the orangish line is at 8 days, the green line is at 9 days. And this shows you the path. And so if you see, do you see this little, line that's going up and down? This is after. This is what happens after. Right, so you have this little hitch back, little consolidation, and then you just slowly grind up. Do you guys know what edge of mine or what edge do we use in this room that would really benefit from a slow and steady grind up into the end of year? Yeah, you'll get a lot of bullish patterns like the ascending triangle. But we can find those through the TTM TPS trade. This is Nate's edge, guys. And so I expect Nate to do extremely well into the end of the year because I think there's going to be a lot of those setting up, and they're going to be more stable. I'm doing air quotes right now. You know what I'm talking about? When I say stable, they're going to be more stable. Maybe not like the bull run for 10 years before 2020, but I think they'll be more stable than what we've gotten in the last couple months, because what's happening is you're getting a little bit more direction, and I think the emotion's going to be taken out, and that's what this massive price action swing is, in my opinion. Yeah, exactly right. Stable. Another good read here is Technical Strategy, Trend Cycle, RBC Roadmap. This is a good read if you want to read it. They talk about their thought process for the end of year push as well. They agree with me, or I agree with them. Now, the reason I want to show you guys this is you need to be able to spot these things before they happen so that you can take advantage of them. That's it. Okay? And so this was the thesis, like my thesis for the past 3 months, was setting up for this play. I just didn't know where the bounce was going to start from. It was going to start from mid-October, end of October. I tried it multiple times. I made money and I'd get trail stopped out. And ultimately my big wins paid off. And now I'm sitting here with a bunch of cash ready to get back to work. And so my goal for this week, guys, is to trade as little as possible. How often do you hear me say this? Doesn't mean I'm not going to trade a ton, because you know me. This is my goal. But that's the goal. We'll see if it works. And so I'm going to be looking to put this cash back to work for a run into the end of the year. And I think the timing of this week's going to be good because it's ChopX, right? So I'm hoping we get some good pullbacks, some good sideways action. Sorry about my phone, guys. I have to keep it on noise in case my mom wakes up, and I can go down there. Every day that she wakes up, she doesn't know where she is. She's panicky. She's freaking out. And I have to go through this like 50 first dates. I have to go through the whole spiel over and over. Okay, so now what I want to show you guys is I want to help you understand how I trade, and how I trade with value, with technical analysis, using earnings. Earnings is the only thing that matters for what? For value. Chart patterns and the candlesticks they're the only thing that matters for technical analysis, right? And in my opinion, I think whatever happens between earnings is noise. What I mean by that is People are arguing over what their future earnings results are going to be. It's going to be great. It's going to be bad. Blah blah blah. Right. And so we can play with the human emotion in between, but when the rubber meets the road, we get the earnings report and we figure out if people are doing well or they're not doing well. And so I sold most of my positioning that I did from the pullback in August, September, October. I've already sold most of this. Because remember, I tried to bounce here, I got some, but then I got stopped out, right? Then a trail stopped out. Same idea here, trail stopped out. This time it worked, right? And if it rolls over and trail stops me out, the 15% that I got left, great, I don't care. I've already made my money. I don't think that's going to happen. But now we're actually creating a higher high, and this is going to allow me to set up new plays. All right, so I sold Netflix. I captured $1 per share. I think I did this on mic with everybody. I love the earnings play on this. It was perfect. If you have any questions about Netflix, why we were doing Netflix, let me know. I sold Microsoft, most of my shares from the past couple months dip buys. I also sold my January 24 300 calls for almost 100% and my June 24th 400 calls for 100 to 150%. Now, I want you guys to think about how far out I have been sitting on, how long I've been sitting on these and how far out I play. So what I'm looking for now on Microsoft is to get a year to a year and a half out, right? So I don't want to be buying January 24 300 calls anymore. I'm probably going to be buying January 25. Right? Like when I play these really long calls, I go really far out so that I can have months of time to absorb. These are the levels that I'm still holding from. You can go back and look at the chart and figure out why if you want. And just remember the way that I play things is I try taking shorter time frames into longer time frames. So as I'm still holding down from here because the levels never broke. I'm still holding from here because the levels never broke. I'm still holding from here because the levers never broke, right? And so that's why I'm putting these on the document so that you can go back and understand what I'm doing. Now, do you remember what I said at the beginning of the document? I said, hey guys, if the shorter time frames break, great. I'd love to lose on the shorter time frame so that I can get bigger winners on the longer time frames. So there was a weekly squeeze on MU that I was playing, and I was using the TPS rules, and I said, hey guys, if this breaks down, I'm playing a weekly squeeze, right? So if we break lower and I get stopped out, I'm playing a weekly squeeze. This is what the chart looked like when I put it in the my morning stuff, the DDD. And you can see this is a nice chart. Maybe we're going to break up. Okay, you broke a little bit higher, but I'll give it a shot, right? The reason I was giving it a shot is because, for one, I wanted to keep track of what this chart was doing so that if it did break down, I'm in. Because this white thick line is where I wanted to buy. That's my wave the magic wand. And the ADMA was about 67. So I was going to be absorbing from 67 down to 64. And so I took a loss on that 195-minute chart, but this allowed me to load up at my area. And let me show you the MU chart now. Just look at the weekly chart. I mean, it's amazing. Right? See this weekly squeeze fire long? You see how it bounced off this thick white line twice? Man, yes, please, give me that, right? So I took the loss here so that I could pick it up here, and off we go. And that's the idea of saying, okay, I don't care what happens with the chart. Stop me out, make me money, it doesn't matter. I'm eventually going to make money. And so as soon as this broke down, I was thinking, oh, great, I'm going to make even more money now, right? Instead of getting mad that my trade did not work. Costco was actually the very first idea that I put in here with Nate, and it was back when we were in a weekly squeeze, you know, and I'm still holding from back here because we've never broken lower, right? So I'm still holding and waiting, but I did sell a bunch of Costco, and again, the reason I put Costco on this to give you an example is, I have an edge that I call AMD. Well, that can apply to a lot of different companies. Basically, what that means is I trade one company and I stay with that chart because I believe in the company, I like the company, and I believe that it's bullish because the company's good, it's got good management, and that's Costco. Costco is one of my top 3 companies. If I could only play 3 companies, Costco would be one of them. Now, this is from my DDD from September 11th. This is what I was playing right here, right? And we were playing it, and I was like, it's going to break out, blah, blah, blah. Here we go. We're going to make some money. Well, this is the chart now. Do you see how we broke out? And I don't know if you guys remember, but there was one day where Nate was like, hey, Costco's getting slammed. And I said, man, I don't know if I should buy this. I don't know if I should buy this. But as soon as I looked at this chart, I immediately bought. I said, I have to buy. Right? And Nate bought it too. And we made money, right? And so staying with this chart, using this, playing just this edge, allowed me to capture a lot on Costco. And so if you guys are struggling with what I call the shiny object problem, which is you're always looking for the next stock that's going up or the shiny object or whatever, maybe you should stick with one stock or 2 or 3, right? And that would help you focus so that you can trade it. But like I've said, since 2022, Costco 600, here we come, right? And I could go through these on Amazon, Meta, AMD, NVIDIA, but it just takes too long. But I put these in here so you could learn how I play longer term plays by keeping pieces from the shorter term plays. Now, the longer term plays that I've got in here that I want to go over with you to help you understand how to play value plays is this is what's so long, guys. This is a lot of data. So let me take a pause here and catch up on chat. Let's see. Yeah, D-Man, are you thinking the Moody's downgrade will have an effect over the first part of this week? I sort of think that it is a catalyst for the markets to take a break over this week. Probably very choppy, but I'm targeting into this week to start getting into swing trades. Yeah, Nate, I don't know if you can still hear me, but I agree with you. And there's also the catalyst, where they can. It's the funding. You know what I mean? The government funding. You know how they're always like, we're gonna run out of money. We got to pass a bill to. You know what I'm talking about? So that's Friday. So they gotta have a plan together by Friday. It's the shutdown risk. And so yeah, you've got the Moody's downgrade, you've got a shutdown risk. You've got catalysts to kind of pull the market in. So yeah, no, I agree with you, and that's why I am gonna play this week, but it's gonna be much more conservative for me this week. But who knows? Maybe it just keeps ripping. That was my plan when the market didn't agree. Yeah, right. And so for me, Nate, that's the kicker, right? I will play intraday trades, and I'll swing intraday trades if I've gotten out profits, but I'm not going to be starting anything unless I see some kind of irrational sell-off like we did in Costco. You know what I mean? I'm not purposely starting any long-term trades up here. Does that make sense? If I get trades and I make money in them and I want to swing pieces for a week and turn those into a month or whatever, then yeah, I'll do that. But the goal for right now is more shorter time frame intraday plays. The only exception for me is getting named like Datadog. Yeah, but I'm actually going to play Datadog the same way. I'm going to do the same thing on Datadog that I'm doing with the others. Yeah, I agree. Yeah, no. So for me, to be honest with you, Nate, that candle, um, this candle right here, it was hard for me not to chase this into the close. So Nate was saying, "Hey, I'm going to take this bet 100 out of 100 times." He's correct, and the reason being, guys, is because statistically, this play is going to work out a lot more than it's not going to work out. Like probably close to 75-25. This just happens to be one of the 25% of the times it didn't work. And so you should make this bet 100 out of 100 times. Okay. Datadog 78, your favorite. Is it in the buy zone at open, Nate? No. Well, is it gapping down? So the buy zone on this is, let's see. Yeah, we just see. This is a lot of the problems that I see with some of the charts that I actually like. They're just nowhere near a buy zone, and so even on this, Nate, per the rules, you got to wait till 102.16, right? So you got to come back $1.50. Are you going to chase it up and just add to it if it goes lower? Oh, you bought on Friday. Oh, okay. Yeah, there you go. So you bought it in the right time. Yeah, I love it. What time is it? I'm going to cut this off in about 10 minutes. And so here, I'll run through as much as I can here, guys. And maybe we stop after CPS. But, I don't know how many of you guys know this company or what they do. But this is a company that I am long in and that I have been long in for a while. And, we've gotten literally a 4-bagger out of this, right? And so I've been taking profits, buying dips, absorbing, taking profits, buying dips, absorbing, right? And I personally think this thing's going to hit 40, 50, 60. We'll see. But one of the things that I do is you have your story, you have your numbers, the financials and all that kind of stuff, and this has all of it. Now, what's happening is you're starting to get a lot of car incentives. How many of you guys are old enough to remember 0% car incentives? Because if you've lived only through the 0% interest rate, these aren't new. These would be new to you because they didn't do this a whole lot because who cares? 1% versus 0%, it's not that big of a deal. But 0% versus 9%, which is where we are now, or 8% or 7%, then yeah, that's a big deal. That's going to save you a lot of money. And you can see all these cars are coming out with 0% interest rates, right? That's an incentive for them to buy their cars. And so if you can get a new car for 0% interest rate for this amount versus a used car for 9% interest rate, a lot of times it's actually cheaper to buy the new car, right? And so when you go and you look at CPS's balance sheets and you look at their numbers, everything is in line and they're actually ahead of schedule. They're buying their shares back. That shows respect for the equity of owners. Management compensations turn to ROIC, so we expect management to be looking out for themselves, right? And ROIC is just return on investment capital, right, as well as equity owners. So the operating leverage in this industry is unmatched. So what that means is as volume goes up, price will not. Their margins will increase. Cost will not. I shouldn't say price. Cost will not. And so in Subway there was this magic number of about 75. This was back when I was doing it, 7,500 to 8,500 a week. So if you could get over 7,500 to 8,500 a week in sales, your profit margins would just start going through the roof. And so my target on doing anything with Subway was to get it over 10,000 because your profit margins were through the roof, you were good to go, and it was beautiful. And so I didn't want to buy any stores doing under 7,500 a week. And so that's the leverage that I'm talking about. And I put a little bit of info in here so you can go through and understand what they do. But the idea here is on CPS that if we can get back to these 2017, 16, 18 levels, which is what is projected here, then we could have the bagger that I'm talking about, $40, $50, $60 a share valuation. And so you can look in 2017, this is what they looked like, right? 3.62 billion in revenue, 452 mil adjusted EBITDA, which is 12.5% of revs, 135 mil net income, which is 3.7% of revs, right? And you can go through and you can read all this stuff. And at the very peak, it was right here, 146 bucks, right? Which is crazy. What kind of multiple is that? Well, you're at a 20 times multiple at that price. Okay, so if we get back to 2017 levels, what can we expect? Well, at a 10 times multiple, it's $72, right? So if we got back to the peak multiple, it'd be 146. So let's just say we get to a 8-time multiple or 7-time multiple. You know, I still think 50 could, from this point, produce 300 to 400% winners, right? And then you would want to come through and you'd want to look at your numbers that matter. And the thing to remember about earnings plays, guys, is technicals don't mean anything. Literally, they mean nothing. And so just because a chart has been beaten down and is way down, it doesn't matter. This is how Buffett made his money. He found undervalued companies that were temporarily hit, that he would take shots on. And this trade is actually a trade that follows one of Charlie Munger's trades. It's the exact same idea and thesis. So just remember that when you're coming in here and you're looking at valuation, your chart doesn't matter. And when you're looking at your chart, your valuation doesn't matter. These are two separate independent ways of trading. And so you come in here and you start looking at sales, net income, adjusted net income, right? Loss per share, income per share, right? You want to start going through here and you want to check out what they're doing and if they're growing and what their projected guidance is, right? And that's what becomes the most important, okay? All right, so let me pause here, right? You can go through and you can read about this. Everything's moving in the right direction. Net income generated allowed them to, actually they paid back a loan that they took out just in case of an emergency, in case things got bad, but they didn't have to use any of that money, so they were able to pay it back. And I could keep going and show you all this, but this is just an idea of how to get started in valuations, okay? All right, we're gonna take a pause here on this sheet. And kind of go through what I'm looking at for the day. So let me stop this recording.